Hello, MJ friends. Party kind of day. Kind of day where it's almost like the Willy Wonka of trading setups. You got a little bit of everything. Everything was clicking. Everything was working. Kind of day where you stay at home in your robe all day and click some buttons. So we had oversold bounces. We had breakouts. We had blue sky breakouts. We had continuation moves. A little bit of everything. We're going to look at the major five, the big tier 3, VFF, TGOD, NRTH, CURA, MedMen, CWeb, and IAN. I know a lot of you keep asking about other tickers, but time is limited. This is who we're covering. And let's get into it. So let's recap and look at a couple things. First off, yesterday's setup. So ended the day yesterday saying, I'm interested in Cron's bounce, I'm interested in VFF's bounce, and I'm interested in TRST's bounce. Heading into pre-market, I was able to narrow that down. I looked at the setups. I said, VFF, lower open, great. Let's test that low of the day, see if we get a bottom fishing opportunity or a flush for an entry. Cron, gap down open, perfect. That's exactly what we're looking for oversold conditions to play off of daily support. TST was telling us that TRST was not seeing a lower open and it was not seeing a gap down. I didn't like that setup. I wrote it off the list. Not interested in CTST this morning. So then I'm looking at VFF and Cron, and very easy for me to eliminate VFF and say, I'm just going to focus on Cron this morning. It has the liquidity. I want to play a larger position because I'm more confident in the setup with daily support and hourly oversold conditions. So bought Cron right after the bell rang. I would have added, let's start with Cron. So the game plan heading into the open was to buy right away because the hourly RSI was already oversold and we were seeing weakness into the open with the gap down open. Gap downs are for buying. Yesterday was not a gap down open by 6 pennies. Today was a clear gap down open. So we pushed down. I got filled probably in the 1960s, right around 1970, and I would have added in the low $19 range. So while I was entering a big position, I had a full game plan to enter a huge position if I had to, if we pulled all the way back down to the low 19s, and that would have given us an hourly RSI at that point down in the low 20s. So didn't have to add that second position, had my first position, and I scaled out very quickly. And my reason for that is I had a week maker in 10 minutes. And if you give me a week maker in 10 minutes, I'm going to take it every time. I also had other plays to be watching. I was still in my ACB swing, which I'm still holding at this point, and I was going to go and focus on other trades, which is what I did. So had I stayed in, would have made more money, absolutely. But as I keep saying, my current trading style is conservative mode. After 2017 crypto, 2018 MJ, I'm just not going to give back any of that profit. So my goal is to lock in profit when I have it, and my mistakes are going to be leaving money on the table, not giving money back. And like I said, that just keeps my one step in front of the other for my account total to continue just moving forward. I don't need huge home runs. Today was an opportunity to nail a huge home run. This bounce was massive, and the speed at which it happened told us huge money was buying. And that's a little clue for me to say, all right, we got our daily equilibrium to be watching. I think that means bulls are anticipating a bull break. We have our high, low of the pullback, lower high, and our higher low was very clearly set today. So now it's all about 2296 resistance, and I would be shocked if we were able to break that level without consolidating more on the hourly time frame with the size of this bull move. So it's currently about 7% from where we stand to get up to that resistance level. Ideal scenario for us traders is to stay in this tightening pattern. I'd love to see a rejection from 2296, a little pullback for a higher low in the $21 range, and then we will look for the break of this equilibrium. And SPY is still a factor. We're seeing a little bit of uncertainty in SPY the last couple days. No red flags, no clear bear signals, but if SPY were to start weekly consolidation sometime in the next 3 or 4 days, in my opinion, that could be a catalyst that affects the direction that this equilibrium is going to break. If SPY holds up just fine and hangs around 280 for the next week, then we can easily break bullish from these patterns on CGC and Cron and these other tightening names. And if we pull back and see a multiple percent pullback in the S&P 500, that might ruin the bull break party. So we'll keep an eye on it as always. And we're going to watch for 2296 key resistance tomorrow and see whether or not the bulls are able to make it up to that level. If we lose the hourly uptrend without breaking 2296, our daily lower high is set, and we're going to look to pull back for that higher low. CGC, same daily setup. Beautiful equilibrium. Couldn't have asked for it any better. Hourly oversold conditions heading down to key daily support is what had us very confident. So higher low established, close at the high of the day. Anything under 49.86 is a lower high. Bulls have a little bit more distance to make up to get to that resistance level. So 8% or so. And if we can't break 49.86 and we lose the hourly uptrend, which again, extremely overextended, we need hourly consolidation. If we see higher opens on CGC and Cron tomorrow, we're going to be looking for the potential of profit taking to be initiated on that gap up open, because thinking that we're going to be able to break that 48, make that 49.86 resistance without hourly consolidation, certainly extremely unlikely. And we're watching the hourly trend. Can the bulls break resistance on the daily time frames? Or do we lose the hourly uptrend and stay in this tightening pattern? And like I said, I prefer to stay in the tightening pattern because then the break's more clear. The bulls have more ability to see momentum and follow through, having consolidated before that break, as opposed to just seeing a straight up, 20% bull move into that resistance break. ACB continuing to swing my position. I don't hold positions often for multiple days, but ACB was very convincing, and the volume did it again. The volume on the bull break of 725 is why I was interested yesterday, and the bull break today and the volume behind it, very easy to convince me to keep holding. The weekly higher low has clearly been established. The daily trend changed. The volume's backing up the bulls, and we're looking at 790 as the next resistance level, and then 8, and then 834. So no red flags here. We are getting extended on the hourly as well. If we see a gap up open tomorrow, I'm probably going to take my profit. We'll have to see how that goes. I'm checking in. Whenever I'm looking to the right, I'm looking at the after hours action. No clues, but it's all about how we open tomorrow, knowing we are extended. And again, I am going to be locking in that profit fairly soon in the near-term future. APHA, nice day as well. Here's a key resistance test approaching of 1059. After 1059, we're going to be looking up at 1095. And our new daily higher low is clearly established at 961 to keep the bulls in control. And we'll see if we can get a volume spike and a break of these levels to try and get continuation and a nice solid close for APHA at the high of the day. Bulls really kicked it in the last 5-10 minutes or so. So everybody's looking good out of the major names. TLRY is a laggard, absolutely. So we held support. We're still in the daily equilibrium and the tightening range. Or I should say the weekly equilibrium and tightening range. Bulls are trying to form a daily higher low at 76.60 to maintain support, and our resistance is 83.10. Not a strong close. Upper wicket profit taking doesn't compare to the other four names in terms of strength here at the end of the day, and looking for momentum into tomorrow. So I'm not interested in TLRY. I will be interested to watch how this weekly equilibrium breaks, but as of right now, we're still tightening within that range. OGI, Blue Sky Bull, and if you saw the interview that I did on Midas on Friday, I specifically highlighted OGI. They always ask me, what do you want to talk about today? And I said, I want to talk about, I forget what I said, but proximity to Blue Sky Breakout was one of the topics I wanted to talk about, and highlighted OGI from the weekly for healthy consolidation, proximity to the all-time high, tier 2 names getting attention. We got these upgrades and coverage and all that going on, and the bulls got followed through. We had some news as well. A whole spattering of news this morning only helped the sector bulls. And we got Portugal news for ACB, so that obviously had an effect on today. But look at that volume on OGI. That's just perfection. This is a cup and handle pattern. And the inability to break the left side of resistance, healthy consolidation, usually the handle's in a downward channel, but that's a handle enough for me. I'd hold that cup. And the bull break was very clear. Entered on the bull break of $8, very convincing. Break of 8.15 is giving you follow through, and then the icing on the cake is the break of the Blue Sky of 8.55. We didn't have the ideal close. All these other names closed at the high of the day, and there was profit taking on OGI, which makes me want to shake those people and say, don't you know about Blue Sky Breakout? What are you doing? But we're still holding on strong, and we're going to be looking down tomorrow at supports of 845, 839, and 837, a few levels to be watching, and key resistance is 867. The bulls want to break 867 first thing to give confidence in Blue Sky continuation, because if we try and break that level and can't do it, we're probably going to pull back and need hourly consolidation. So I am swinging an OGI position as well. My entry was early in the morning on the bull break after my attention was taken away from Cron, put it into OGI, and then I added on this hourly consolidation here in the low 840s. So I've got a comfortable position in ACB and CRON that I'm swinging, or I should say ACB and OGI that I'm swinging, and IAN, still swinging that. Other than that, looking to lock in some more profit tomorrow. HEXO. Pulling back on the daily now 4 days in a row. And again, this is why I love the sector right now, because you have names consolidating while names are breaking out. And there's sector rotation going on. Normally you refer to sector rotation when you see money leave the tech sector and go into the financial sector. And that's a way that money can shift around and keep the overall stock market strong. So rather than everybody running and get really overextended and then everybody pulling back really hard because we didn't establish support on the way up and taking the market on that ride with it, sector rotation is when that money can move around. And if, financial sector goes up 1% and the tech sector consolidates 0.5%, and then the next day the tech sector sees a continuation move while the financial sector, it's almost just playing tag team or leapfrog and allowing breathers to be taken by the bulls while other names remain strong. And in my opinion, there is this swirling of money going around, and there's sector rotation within the MJ sector going on just from name to name. And people make their profits in a blue sky breakout like VFF or a strong move like TRST, take that profit out, dump it into OGI for the blue sky breakout, and again, just different setups. So we're going to look for people to take profit and look for an entry into HEXO and look for a higher low compared to 708. Have to change the hourly trend for an indication that the daily higher low has been established. Bulls want to bounce first thing tomorrow to give us an equilibrium on the hourly. If we can hold 734, we'll form a higher low, and then we'll look for potentially a lower high compared to 769 resistance. So an hourly equilibrium setup if the bulls can hold 734 in the morning tomorrow. If we can't hold that level, zoom out to the daily and watch for the bulls to defend 708 daily support. Uptick in volume for the bears here if you don't zoom in, but if you do zoom in, you can see there is some solid bull volume mixed in there, so it's not all bear volume accounting for that increase. TRST, daily inside bar. So the hourly time frame saw a bit of a bounce take place, and we were looking at the potential for that bounce. Again, I didn't really like the entry because of the better opportunities out there, but it played out very nicely, and we had the low of the day yesterday hold, set resistance at 1240, and now the bulls have to hold 1173 and break 1240 to change the daily or change the hourly trend back to the bulls and have our bulls try and head back to the all-time high. So, or not the all-time high, the high of the bull move. So a daily inside bar to be watching on TRST and the hourly time frame with more clarity of those levels. And if we drop down and break 1173, clearly daily consolidation is underway and we'll have to form a higher low. VFF, beautiful consolidation. It's a bull flag on the daily at this point. It's up to the bears to prove to us that it's not a bull flag on the daily, but the hourly perfection pullback on the Canadian name, we broke the low of yesterday first thing, and we broke it by 7 pennies. The US name held support by 2 pennies, so it was a perfect bottom fishing play and a beautiful follow through on that 8% bounce from that low. So we got our high, our low of the pullback, bit of a double bottom, and now we're looking at a new support established here at 1325 into the end of the day. Bulls have to break 1372 to see continuation. And if we break 1372, we change that hourly trend back to the bulls, and that's a scenario where, again, we're watching for the potential of a daily bull flag. We can still pull back on this daily chart and still be fine in terms of holding on to strength, but if that's the low of consolidation at 1261, that's extremely bullish. And keep an eye on the volume. Obviously, very low volume while we are consolidating here. And then once that volume normalizes and then starts to uptick again, just like back here, tightening pattern, volume drops off significantly, lower volume, convincing price action with volume behind it. So as we tighten up, we're going to look for lower volume, and then continue or convincing volume with a break in the tightening ranges. T-God, perfect follow through, perfect bull volume. Had to break 385 resistance to get confidence in continuation. Again, highlighted the psychology of this cup and handle pattern where we were unable to break resistance, healthy pullback. Now we get the follow through, and the fact that we broke 390 right behind it after 385 gives you that confidence in the follow through. So people talk about, how do you recognize a fake out? If you have increasing volume in the direction of the break of a pattern and you take out not only the first level that's the signal, but the level behind it, that's when you get very convinced. Volume and multiple levels breaking. So now we're just looking at 432. the top of this move at this point. And the weekly time frame is trying to confirm trend change continuation, where we have the weekly higher low established during that consolidation, and now we're looking for that higher high. And again, just talking about names in different points of their charts, look at this weekly chart for TGOD, higher low and heading up towards resistance. GTII in the US space already did that. Same kind of consolidation. There's your continuation. And looking at GTII on the daily, healthy pullback, looking for another daily higher low to form. We do have a double top at 2018 and 2012 to be watching, but that resistance is potentially going to be tested tomorrow. Point is, the weekly time frame, perhaps a glimpse into the future if those TGOD bulls can keep it up. NRTH, huge gap up. Volume climax is potentially likely here. So we got to be cautious of that. We have now run in the last 2 weeks almost 50%. So the hourly time frame here is going to be a good guide. We have our high. Where was our low of the pullback? 103. Lower high, higher low, lower high. Still in an equilibrium. Break 105 and 103 tomorrow, and daily consolidation will be underway. And 9, 10, and 12 are the resistance levels if the bulls are going to try for continuation. So congrats to the penny stock bulls who have been riding this one. A lot of members in our chat room have been playing this one, approaching the all-time high, but might need some daily consolidation before we consider that. CURA, worth watching for these bulls. It's looking like if we get a break of 1054 and we get the volume spike, again, look at the tightening range and look at the volume drop off. So if we break 1054 and in the first hour of trading, we see, wow, we're going to pass easily that volume of yesterday. That's the convincing action for the breakout. Keep an eye on CURA the next couple days, probably tomorrow. But if we break 1054 and see that we're going to set more than 350,000 shares traded on the day. So again, I always look at volume and I look at time. And if I see the first 45 minutes of trading, we have half of yesterday's total volume, I know we're going to surpass that volume on the day. So that's what I'm doing in terms of comparing volume. And if we break 1054, we want to see convincing volume and a break of 1068 to confirm that. And then we're looking back up at the all-time high. Maybe it's coming. Maybe OGI bulls are going to take their profit from blue sky breakout sometime in the next day or two and dump it into CURA, playing musical chairs with profits in this sector at this point. And we are closing in 10% to blue sky breakout. MedMen. Earnings, not sure when they are. Double check. Maybe tomorrow, I think. And on the daily time frame, a big upper wick of profit taking. So pulling back, still an hourly uptrend. Bulls want to hold 418 to keep that. But if we pull back any more, it's looking like an hourly equilibrium would be most likely, as opposed to just straight up continuation. Still fine overall. It's just not as strong a close as the bulls would be hoping for. And there's the potential of a daily inside bar forming tomorrow because we're right in the middle of this large range from yesterday's or from today's trading. And again, we're expecting a weekly lower high unless it's a blowout earnings and we have a significant bullish reaction. Anything under 506 is a weekly lower high, and that is the most likely scenario that we are anticipating happening after the weekly supports were broken. CWeb. So CWeb had shares unlocking, and this is that being priced in. And the market is really good about pricing in known events. So we have blue sky breakout and we pulled back very significantly from that blue sky, 20+%. And the reason for that is the market pricing in these shares becoming free trading. Very rarely will you see, if it's a known event, will you see the day that shares become free trading, an all-out dump. It just doesn't happen because the market is so good at pricing things in. So we're getting a bounce attempt now. We're watching for a weekly higher low to form. Might get an inside bar this week. If the inside bar breaks bullish next week, then our weekly higher low is established. And if it were to break bearish, then we know it has not been established yet. In terms of the short-term action, there's not a ton of clarity. You know, we had an hourly higher low and higher high. So that did change the hourly trend, and we are looking for another hourly higher low to form compared to 1785. A lot of space for those bulls to work with. But it's the illiquidity here that makes this chart a little bit choppy for me. So I'm going to be focused on the weekly inside bar into next week to see if that can break bullish and give the indication that consolidation on the weekly is done for now. IAN tried to shift momentum to give us the higher low on the daily time frame. We have to hold 746 and break 777 to change the hourly trend, confirm the hourly trend change, and give us that clear daily high or low at 746. So still work to do for the bulls there. No red flags, volume dropping off, but we have to confirm this hourly trend change, and we did see some further profit taking into the end of the day. Checking after hours again, that's that. We're good. So I anticipate some profit taking tomorrow. The stronger we start, the more likely we're going to see profit taking. We have resistance of daily resistance on CGC and Cron to be watching. We are watching names like HEXO, who are due for a daily higher low to form for a potential bounce. We're going to see if the OGI bulls can break blue sky first thing to give confidence in continuation. We're going to watch CURA for potential bull break on the daily. And that's that. Hope you have a great day. And we're going to wrap it up here with something I'm sure a bunch of you haven't seen yet, which is our trademarked TCG GOAT indicator. Hey everybody, this is Charting Man Dan. I'd like to share with you today an indicator that I've been developing for the past couple of years. I feel like it's one of a kind here, really in the world, so I'm very happy to have been working on it and would like to share it with you. A lot of times I get questions, messages saying, hey Dan, you have a really attractive voice. I'm just wondering how you pick stocks throughout the day. And through this little short video, I'm going to show you some of the methods I've been working on and some methods that you can use as well in your own practice and hopefully become a better trader. So let's get into it. So I like to call this group of indicators the GOAT indicator. And as everybody knows, goats are the best and smartest animals, so I like to incorporate them into my trading strategy. And you would be amazed at the insight that a goat can provide you heading into the trading day. So each day I'll come down here in the morning and I'll approach the goat and I'll ask them how they're feeling about a specific stock. So I'll say, hey Lyra, how do you feel about Tesla today? And she's not interested here in the moment because she knows it's a weekend and she knows the market's closed. So she's smarter than that. She knows I'm wasting her time at this point, and her time's pretty valuable. So we'll see what the other goats have to say. That's a rooster. That's George. He's more interested in silver these days. But we've got Nancy and Edna here. And Edna is all about Tesla, big Elon Musk fan. And she was all over it on the bounce that occurred back on the February dump. There were some big gains to be had there. And all it takes is just listening into the goat, putting your ear near their mouth, and you will hear slight, subtle, vocal recognition of what you are talking about, and they can indicate a bullish or bearish position. So I'll get this information, I'll run back to the house real quick, place an order, and reward them with some nice treats. And that brings me to my next indicator, which I call the green indicator, which I will give you an example of here in a moment. So this is a very simple indicator called the green indicator, where I have one sprig is a bull and one sprig is a bear, and I will present them to the goat and ask the question, you know, what do you feel about Apple today? Is Apple a bull or a bear? And whichever one they take first, see, that's a bull. So we know Apple is bullish heading into Monday. And there's going to be a pullback. You can see the bear gets eaten as well. And we've got Lyra here now. Lyra's going for the bull. So that's a clear indication. We got a double goat bull heading into Monday. So we'll be looking for some upside on Apple. And we'll head on to the next indicator now. So this is another indicator I like to use. I call it the processed indicator because it allows the goat to process all the information overnight, digest it, and it's a non-emotional reaction here of their interpretation of the chart. So here we've got a SPY chart. I lay it out the night before. I come back in the morning, and you can see here, a lot of people call this goat poop, but I feel like that's a little crude of a term here, and it's a resource that can certainly be utilized. And you come out here, look at this SPY chart. We've got a double formation here at the top of the Brexit, right before the Brexit boat, and there we got the dump. Look at that. That's a triple bottom rare formation, and that's exactly where the bottom bounced up, and now we're heading to all-time highs. So this was a perfect indication leading into the Brexit bounce that let us know that we were going to have new all-time highs in the very near future. I've never seen a triple bottom there, and that little cluster certainly an indication of the strength that was to come on the bounce. You doing some studying? Reading up on the chart. Not a good girl. Yeah, getting in on the action. See, this is you can't duplicate this. This is absolute dedication. I've trained them for 3 years to do this, and they're looking at all kinds of indicators here, and they're going to have some good information in the morning. Hey everybody, so this is our resident nerd bird, and she is the expert in commodities. And what she will do is she will study a chart and tell me what she feels is the longer term outlook of the chart. And we call her nerd bird because she's always got her head buried in a book or a chart. And she was really bullish on gold at 1,000, and you can see what happened there. She was telling me about gold every day. And all it takes is just listening really quietly to the animal, and she will tell you what you want to hear. And she's ready to go. So that's Nerdbird, and that's an indicator for commodities and a resident expert here on the farm. So this is another indicator I like to use. This is the chicken coop here. This is the chicken egg indicator. So we've got some wonderful chickens here that like to give us some tips into some stock. So I'll come in here every morning and see if there's anything on the agenda here. We've got nothing on there. Let's see here. We've got a... Oh, that's a Twitter. Okay, so that's a bull. You can see that's a nice, healthy egg. That's Twitter's icon is a bird, and when you got a bird laying a Twitter egg, that is a bullish indication. And let's see what else we got in here. We got one more here. That's a TVIX. Now look at these comparisons. So we got a Twitter egg, and a TVIX egg compared to each other, and you can see how much smaller that TVIX egg is. That is a bearish indication. You don't want to be playing TVIX on a downtrend, trying to catch that bounce. And you can see the big difference between those two names right now. And we've got Edna supervising over here. She's making sure that the chickens are current and up to date on the financials. We got earnings seasons coming up, so Edna certainly keeps them on tap with what to be focusing on for the week. So that's the chicken egg indicator. So act now, and for a limited time offer only, I will send you for just $500 a copy of my new book, How to Trade Like a Goat, and also your very own baby goat in the mail to help you with your trading career. I appreciate you watching. I hope you have a wonderful weekend. And again, remember, be the goat. Hey, big girl. How you feel about Baba? Is Baba bullish? No? Baba boo? By you. Baba boo?